Welcome to The Explainer. Today, we're diving into a revolution that's already happened, right here in 2026. We're talking about a world where the truth isn't just something you read about, it's something you can trade.
You know, for generations, we all had the same playbook. We turned to a select few, the experts, the analysts, the pundits, to tell us what was coming next. But that authority is completely crumbled.
And that leaves us with a huge question. If the old guard can't give us answers, where do we go? Well, this has led to a massive shift in how we understand reality itself.
The answer, it turns out, doesn't lie in what people say, but in what they're willing to risk. And that brings us to prediction markets.
Okay, so let's break this down. What exactly is a prediction market? The easiest way to think about it is like a stock market, but for reality. Instead of buying a piece of Apple, you're buying a piece of a future event. It's basically the ultimate BS detector.
So how does it actually turn opinions into a hard number? It's really elegant. First, you pose a simple yes or no question. Will the Fed cut rates? Then, traders buy yes or no shares. The price of those shares, which can be anywhere from a penny to 99 cents, shows you what the crowd believes. So if a yes share costs 65 cents, the market is screaming that there's a 65% chance it's going to happen. The price literally is the probability.
And here's the secret sauce. Skin in the game. This is what makes it all work. If you think the crowd is dead wrong, you don't just fire off an angry tweet. You put your money where your mouth is. You bet against them. This simple incentive forces the market to constantly and brutally correct itself with the best information out there.
And the results? Well, they're not even close. This chart shows what's called a Breyer score. Just think of it like golf. The lower your score, the better your forecast. And look at this. Prediction markets down here at 0.09 are dramatically more accurate than the expert polls we used to live and die by. They even blow a random guess out of the water. It's a stunning difference.
So these markets are incredibly accurate. But what was the catalyst? What happened this year in 2026 to make them so powerful? It all came down to a regulatory earthquake. Things moved fast. In just a few weeks at the start of the year, a new CFTC chair launched an initiative to create clear rules, the agency reversed a proposed ban on key markets, and maybe biggest of all, Google opened the advertising floodgates. It was a perfect storm.
And this is the crucial point. The regulators completely changed their mindset. They went from viewing these markets as a form of gambling to seeing them as essential financial infrastructure, an engine for finding information.
And with that legal path cleared, the industry exploded. We're talking about Wall Street, crypto natives, everyday traders. Everyone rushed in.
The whole space really consolidated around two major players, and they couldn't be more different. You've got Kalshi, the fully regulated suit-and-tie giant. That's where big institutions go to hedge risk. And then you've got Polymarket, the decentralized crypto maverick. It's fast, global, and caters to a totally different crowd. It's the establishment versus the disruptor playing out in real time.
And the scale we're talking about is just staggering. This is not a niche hobby anymore. When you're hitting $700 million in trading volume in a single day, you're a serious asset class.
And here's where it starts to feel a bit like science fiction. This isn't just a human game anymore. For the first time, AI traders are consistently outperforming people. They can process thousands of data sources in the blink of an eye and act on them. They're faster and they're completely unemotional. It's a whole new ballgame. But what if these markets could do more than just predict the future? What if they could help us decide it? This is where things get really interesting. This is the mantra behind a radical idea for governance called Futarchy. The concept is genius in its simplicity. As a group, we vote on what we want to achieve, our values. But we let the market bet on the best way to get there, our beliefs.
Let's make this real. Look at this example. Say a company's goal is to raise its stock price. So you set up two special markets. Market A predicts the stock price if you fire the CEO. Market B predicts the price if you keep the CEO. The decision becomes automatic. The company is bound to follow whichever path the market says will lead to a higher price.
Just think about what this does. It completely removes ego and office politics from the equation. It gets rid of the hippo, the highest paid person's opinion, which so often dominates big decisions. With Futarchy, the best idea wins, not the person with the most power. That's a profound shift.
So, what does it all mean? We live in a world where we've built this incredible engine for finding the truth. But what happens when that truth comes with a ticker symbol?
Our behavior has fundamentally changed. When a rumor breaks, our first instinct isn't to flip on the news or check social media anymore. It's to check the odds.
Prediction markets have become our primary truth engine, the ultimate filter for a world filled with noise.
But of course, this powerful new system isn't without its own risks. You've got a whole new, sophisticated world of insider trading that regulators are struggling to police. And for the decentralized markets, there's always the risk of oracle failure. That one single data source that settles the bet could be wrong or manipulated. That's a huge vulnerability.
And this leaves us with the fundamental question we're all grappling with now. We've managed to put a price tag on reality. We can trade the probability of almost anything happening. But when truth itself is a commodity, what is its actual value? That's the one question the market can't answer for us.